So how is the New Hampshire real estate market today? As of October, I'm going to go over the most recent data in today's video from what's coming out in September. And we're also going to look at current pending data to see what is happening right now in the market versus last month, September. The three factors we're going to look at to determine the condition of the market are going to be the median sale price, the median days on market of both closed and pending sales. We'll also look at those. And then also number three, the number of units sold. Before we get started, make sure if you haven't already subscribed to my channel, if you find this helpful, if you like the market information, to make sure you do subscribe so you don't miss out on future updates, new videos coming out, which there definitely will be as the market remains pretty volatile. Now in this video, I'm going to zoom out a little for today's video and use Hillsborough County instead of just Nashua to show more of a broad scope of what's happening. And I dive into this more in a weekly email I started, which I'll put a link in the description below as well. And with that, we'll jump right in. We'll take median sale price first in Hillsborough County. Actually went down from $465,000 to $457,500. So it did dip a little, which is expected going into fall. However, as I talk about often, the real estate market is a local game. There are different market conditions from town to town. And as an example of this, while Hillsborough County decreased in median sale price, Nashua specifically actually jumped again from $460,000, which was already a 2-year high, to now in September, it was $471,000. Now, there are definitely fewer buyers out there, but this is the perfect example of the fact that less buyers does not always equal lower prices. Now, at least not right away, right? So eventually, it'll probably become true, but I don't think people truly realize how much pent-up buyer demand we have had in especially the southern, even northern parts of New Hampshire over the last few years. And while there's a good chance now it's on the downswing, coming up here soon, as we can see looking at the whole county as a whole, even as the number of buyers drop, it's the aggressiveness of many buyers that is still very high. And as I said last month, I would expect the median sale price to continue to drop even a little bit more as fall continues. That's a pretty normal seasonal trend that we're getting back into post-pandemic times. The real indicator, though, will come in 2024. Does it bounce back like it did this year in 2023, or does it continue to shift? We'll have to sort of watch and see how that unfolds. Last fall, things took a dive, and then by February, they were right back up there. So we'll have to see sort of how that pans out. Median days on market, number two. I like to look at median days on market to see how fast homes are selling, right? And in August, the median days on market for all price ranges was about 6 days. That held true for September as well, right around 6 or 7 days. And to be honest, as someone who's in the market every day working with buyers and sellers, it doesn't really feel like it's that low across the board, right? And it could just be, different perspectives here, but there are definitely more homes that seem to be taking longer to sell, not across the board, but more in pockets, of different areas, even though they seem to be priced pretty well. But because of this, I also looked at the median days on market of current pending deals to see sort of what is the most recent up-to-the-minute data. And these homes are not closed yet, but we can at least see how long it took them to accept an offer and come off the market. So really, when looking at those, you're still seeing days on market right around 7-ish days. So it hasn't really slowed down even on pending sales yet. Hillsborough County had 6 days across all price points for closed homes in the month of September. And even as you go up in price point, it actually goes down even lower. 3 days than the highest home sales, which were around the $2 million mark, were actually off-market sales. So it's reporting zero, but just means it wasn't listed publicly for sale. So that is pushing the numbers down as well. So overall, that is from closed home sales in September. It really has not slowed down much at all. And if looking at pending sales for Hillsborough, like I said, 6-7 days, median days on market. Across all price ranges, it really is pretty similar and hasn't really changed too much. So even homes coming off the market right now in the month of October, right, are still being sold pretty quickly. Will that continue? That is the question, and we'll really just have to continue monitoring it. There's a lot of factors at play here. It will really depend on, rates, how overall demand, will it stand up over time? We'll have to see. Number 3, the number of homes sold. In August, we saw it jump to 95 homes sold, and then in September, we saw a 22% drop in homes sold. Now that is still about even with how many sold in July of this year, where we had around 75 homes sell. So it's not overly concerning to me at the moment. Plus, we're going into fall, headed into winter. It's not all that surprising that activity is down. I would conclude with this, that yes, activity is down and there are less buyers out and about, but looking back at the median days on market and the median sales prices, it appears so far that the drop in buyers and activity has not really had a dramatic effect on the overall market conditions, at least not yet, based on the numbers. Like I said before, I will say, in talking with other agents in the market, showing homes myself, and my own listings even over time, homes definitely are harder to sell at the moment in general, and they are starting to sit a little bit longer. You're not getting the wave of offers on day 1.5, from when it's listed. The numbers don't quite reflect that yet in full transparency, but that's what I'm starting to see from sort of a boots on the ground type perspective. So we'll have to see how that pans out. The wild card will continue to be mortgage rates. I don't think they're going to shoot up significantly in the coming months. I don't see a sign of that. However, I don't rule it out because honestly, anything could happen. They did go up. They went back up recently, and then they've been fluctuating as I'm filming this. So it will continue to play a part in the market for sure. Though keep in mind, most everyone has been pretty surprised about how little effect they've seemed to have on the market as a whole throughout 2023. I do believe we'll continue to see a marginal calming of the market over the next few months, and I am interested to see how 2024 starts off, especially due to that being an election year. And regardless of who's in office, they usually try to do what they can to prop up the markets as best they can to make it look like everything's great. So we'll have to see what that actually means and looks like when that time comes. I would still maintain my opinion last month that if the rates do eventually come down, that's going to very likely bring more buyers back into the marketplace. Remember, the rates have not subsided demand, but they've taken a lot out of it. And if inventory does not start to dramatically increase, and I mean double, triple, we still have very low inventory, we could be back to a familiar territory next year, over the next couple years, with multiple offers, even more than what we've been seeing, because there would be an increase in buyers. So keep that in mind. One tidbit here is there are far fewer experts predicting dramatically lower rates in 2024 than they were a few months ago. The idea that rates are going to significantly drop by next summer was a popular opinion earlier this year, it was an opinion last year, but it's really built on estimates, speculation, and many folks have now started to sort of change their tune a little bit and have it more open-ended, not really sure when they're going to change. So keep in mind, if you're being told, date the rate, you may end up dating that rate longer than you anticipated, which is why I'm really not a big fan of that saying at all. You want to make sure that you are comfortable with that rate if it was the only other rate you had for the time you own that house. So if anything else changed, it would be icing on the cake. So what does this mean for you? We continue to be in an unprecedented market, and the best thing to do is evaluate your own current personal situation. Where are you in your career? Do you have a growing family? Do you have too much house and need to downsize? Do you need a better school district or a bigger yard? Is your rent outrageous? Whatever it is, focus on factors that affect your daily life. And I would say base your decisions on that. The market is the market. It's going to do what it does, and it's going to probably stay competitive for at least one side or the other for the foreseeable future. There will be deals like there always are here and there. There will be price drops here and there, but overall, across the board, I do not anticipate any large scale changes coming soon. And the best hedge against inflation over the last 10 years has probably been the 30-year fixed mortgage. So look at where you're at personally, and if you need to make a move, just build a knowledgeable team around you who can help you navigate the market, understand the process, set the right expectations, create the right strategy as best as possible, no matter what's happening, in the market. So keep that in mind. If you have questions, as always, I'm Sboghigian, realtor in New Hampshire and Mass. If you have specific questions, you can reach out to me directly. If you want more information in general, feel free to check out the links below in the description, and I will see you in the next video.